All right, ladies and gentlemen, we're back with our end of day post wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous post wave price trigger reports. All right, so let's get right into it. So basically, we had some pretty good chart action today. If you take a look here at the Bitcoin futures, you notice that the market did pop up today and got above the resistance zone, but then pulled back down right below it into the close. And we have a bearish trend momentum reading as well. So unfortunately, we're still in the rally mode until this is gone. As long as that bearish trend momentum reading is there, we're still in sell the rally mode. And you're still heavily consolidated up in here. And that's causing the market a lot of problems, being able to truly run and break out. So we will see. We will see moving forward. Next up, we got nat gas, still in a locked in bear market and not stopping. Next up is silver. Now, silver. It's starting to be reminiscent of 2011. I must say, I'm liking what I'm seeing here. The market breaking out all the way to 25.15, which is crazy, right? So the market has already hit both points. I gave you the $24 initial target, and then I gave you the $25 initial target, secondary target. And the market has already hit both of those. And we got our first decent close above the Kumo cloud in some time. Next will be a pullback to the top of the Kumo cloud as support. And we'll see if it can survive that and if it can keep running, because you got a bullish trend momentum reading. You're locked in. This market is locked in. It's in reverse. If you remember the natural gas chart I just showed you a moment ago, that's a locked in bear market. Well, silver now is in a locked in bull market. All systems go. So anyone who has missed their entry point in silver, either because you weren't paying attention or you're not a subscriber to the PulseWave reports, either way, you will have an opportunity to get in it. You're just going to have to wait for the first slight pullback, because you had a couple of alerts. If you blow this up a little bit bigger. So the first rally alert came the week of June 23rd. Secondary alert came the week of June 28th. Third alert came on the week of June 30th. So, and then you had one more on the week of July the 7th. All right. So you had 1, 2, 3, 4 opportunities to get in before the market exploded higher. So if you missed it, it's okay. The market now, if it can settle itself above the Kumo cloud and on any pullback, on an intraday pullback, if we get like a narrow inside day on tomorrow or Monday, that could set up for the next leg higher. The market should run back up here to test the 26.50 range. Okay, so this is what's up. All right, $26 is the next upside target for silver, and if it can do that, if it can get up there, then let's take a look at the weekly chart and see what is in store for us on this one. All right. So here is our weekly chart. Let's see if we can get this to do right. Okay, so on the weekly, going on, what's this? Yep. Okay, this is 2021 when it was at the $30 handle. So on the weekly chart, it still, has some room to run here. You're bullish here too, obviously, but you haven't quite yet gotten up to that $26 resistance. It's going to need to do it. It's going to need to get up above that. So not bad for a start, but you can see just how heavily consolidated the market has been just by looking at the weekly chart. And we had this bearish trend momentum reading that was hanging over the market like a cloud. Then we had a neutral weak bar, and then right after that, you had a rally alert, and the market exploded higher. Actually, two back-to-back rally alerts. So as you can see, the market has been heavily consolidated for quite some time, even up here at these old levels. Between what's here? This is between 24.50 and $30, so like a $5 wide trading range. It's been stuck in that for a minute. Then it broke down for a little bit here, and then just took off again. So yeah, I mean, we're not out of the woods yet. It's not a powerful bull market on the weekly chart by any stretch. It's still a sideways consolidated market, very consolidated market, and it needs to start trending again. I'll start getting happy on this weekly chart when the market starts looking like this again. Let me show you. Computer's acting a little slow now because I got a lot going on. So give me a second. Hold on. That's not what I'm looking for. Hold on. I messed up a little bit. So let me get back to the chart that was on. Let me find it. All right, that's not it. Here we go. Okay. Looks like I messed it up, but that's okay. Let's put it back. All right. All right. All right. I messed up my colors and all that, but that's okay. You're going to see what I'm talking about. So we're still looking at wrong chart. Hold on. Let me get back to my right chart. Where did it go? Where are you hiding at? Okay. I'm going to have to pull it up the other way. I think I deleted it. I hit the wrong button. There was something I want to show you guys, so just hold on. Let me bring it back. Let's see here. All right, where is it? Nope. Just bear with me just for a second while I find what I wanted to show you. Okay, here we go. Now I'm going to make sure I got the right one. Let's try this one. All right, let's see if this is the right chart. Yes, it is. Okay, woo. Glad I got that back. All right, so let me show you what I was trying to show you before. Now I see I hit the wrong buttons. All right. All right, so all right. I wanted to show you back here during 2020 when silver exploded. Remember this back here? That's what I was trying to show you. All right, so it started on the week of July the 10th, and the market started its ascent and went all the way up here to $30. So you were down here at the teens at $18, then you rallied all the way up to 30. So if I can see something like that again, and notice how this is happening above the Kumo cloud, if we can get another situation like that going on, I think we'll be great. I think that's what we need though, and we haven't been seeing that. The market's just starting, so hopefully it can catch this rampage that's coming up, and that should help catapult it back out there. And then we should have everything above the Kumo cloud, and then the market should be able to start building upon that strength, because that's really what we're missing at this point, is that altogether strength. You know what I mean? So we'll see what happens. We will see what happens. All right. So next up is the Dow. All right. So the Dow here, pretty much the same thing happening. Um, you got your long-term and intermediate terms good, but you got the bearish trend momentum reading even still, even after today's movement. This is after today's movement, and um, that has not changed. All right, look at this. You're still consolidated. All right. Yes, your long-term trend is bullish. Yes, your intermediate trend is bullish. Yes, you're above the Kumo cloud. All that stuff is great. But you got a bearish trend momentum reading. And what I've shown you and taught you since I've been here is that as long as you have a bearish trend momentum reading in a market, it's still a sell the rally mode until that turns green and we get that bullish trend momentum reading. Then the market is free to really explode, just like silver right now. Silver has a green bullish trend momentum reading, so you cannot do it unless you have it. All right, the market will not move without it. And historically speaking, the biggest cycle movements we ever had in the market, whether it be extreme runaway, breakaway, bull rallies, or market crashes, they've always happened during the current bullish trend momentum cycle. So all the crashes in history, excuse me, going all the way back to 1929, was under a bearish trend momentum reading. The 1987 crash, bearish trend momentum reading. The flash crash of 2010, May the 6th, bearish trend momentum reading. 2020 with the whole pandemic thing, bearish trend momentum reading. All right. All of those extreme moves happen under the auspices of the trend momentum reading. So in the Dow, I mean, don't get me wrong, it's good that the market moved from here to here, but it's still in this wide trading range. And you're looking at 1,000-point trading range. And the market's been running up and down this range. It gets up here, comes down, tests the support, then rallies back up, tests the resistance, and come back down, just whipsawing around, breaking backs and breaking necks. But with all that being said, it appears, all right, we'll see if I'm right, but it appears that the Federal Reserve has been backed into a corner. And so they need to now pump liquidity constantly into the stock market because they know that people watch the stock market. So as long as you see asset prices increasing, all right, you see that inflation happening in asset prices, it's going to make people feel comfortable, like the economy is on the right track and it's getting stronger. But once the truth and the reality of a hard landing recession really, really hits home, then you're going to see that correction we were talking about. And these lows back here, which are not key supports. I repeat, the lows from back here, the week of March of this year, that is not a key support. Once again, these March lows are not key supports. And what that means is once the market comes back down to this level, it's going to just accelerate once it takes this out. Now, what else? Why am I saying that the March lows are not key support zones? It's simple. This is a bearish pointer bar that's never been reconciled. Nope, it has not. Just like the NVIDIA chart, the gap still has not been closed, yet the chart goes higher. All right, so next up, looking at the NASDAQ 100, it's the same story, but a little bit different. The NASDAQ's been the most powerful of the stock indices, and so it's really locked in right now into the bull market scenario, and it has a bullish trend momentum reading, so there's nothing bearish on this chart to talk about. The NASDAQ 100 futures is all systems go. If you miss the last upsurge, then you can wait for the next buy signal and have at it. But for right now, with tomorrow being Take Back Friday, for those that are new just watching, Take back Friday means that if a market's been up all week, take back Friday means the market's going to be down due to profit taking. People like to go over the weekend with money in their pocket. If the market's been down all week, then you're going to see a little pump, a little rally on Friday, again due to profit taking. So that's what normally happens on a Friday. It doesn't always happen though. All right. Sometimes the pattern wants to continue, and it'll continue to break out and rally into Friday. So just FYI, don't be surprised if you see a pullback tomorrow in the stock indices. All right, next up is gold. All right, so what is going on with gold? Well, gold is trying to catch up to silver, but right now we're seeing gold being way weaker than silver. And I have to be the bearer of bad news here. Excuse me. What you're going to see here, chances are, once the market hits the bottom of the Kumo cloud, it's gonna act as strong resistance, and it's gonna knock the price way back down again. It's a dangerous thing because if that happens, it is a strong likelihood that it will take silver down with it, because gold and silver overall move together. Gold and silver is like the Dow and the S&P. They're gonna move together. And right now, gold is below the Kumo cloud and struggling. So either gold is going to catch up to silver, and then this bearish trend momentum reading is going to turn green, and the market's going to be just taken off, or gold is about to break through the psychological 1900 support. The 1900 psychological support is a key support zone in gold right now. If it breaks that 1900 support, it is going to plummet catastrophically. One of the other irons in the fire right now that makes me believe that this is the course that gold is going to take is because we got a negative bot check. For newcomers just watching, negative bot checks and positive bot checks and bullish and bearish pointers are like gaps in a market. They eventually will get reconciled, which means tested and or taken out. 99.9% of the time they get taken out. So if you look back in the past, you got an early positive bot check back here, but the market continued to go down. And then it gave you another alert. The market was finally ready to bottom, and then the market exploded. All right, back here, another positive bot check. What happened? Market exploded. Back here, positive bot check. Market exploded. Early here, early warning here, market explodes. Same thing with the bearish pointers, or should I say the negative bot checks. This is a negative bot check. We have not gotten that big down move yet. Back here, I don't know if you can see this or not, but this is a negative bot check. You got the downward movement into the new 52-week lows. Negative bot check here and here, new 52-week lows. All right, so this negative bot check is concerning for gold moving forward over the next couple of weeks. All right, gold is going to really have to get above the Kumo cloud. It cannot fail at the bottom of this Kumo cloud. If it does, like I said, you're probably going to see gold fall in a big way. And we're talking back down to the possibility of hitting $1,600. So that's a huge move, man. Just be prepared that gold could fall and plummet hundreds of dollars if it fails here. All right, next up we got the S&P 500. So the S&P 500 is looking like the NASDAQ right now. S&P 500 and the NASDAQ 100 are very strong above the Kumo cloud, bullish trend momentum reading, bullish on the long-term and intermediate-term charts and trends. So there's nothing bearish to talk about here. If you miss the pop, you got to wait for the first drop, and then you'll get an opportunity to get back in there. But it's all system go. in NASDAQ and the S&P 500. All right, looking at crude oil. So crude oil is rallying. We got a bullish trend momentum reading. It should be noted that, yes, the intermediate trend and long-term trend are both bearish. So this is an official bear market rally. The market was neutralized for quite some time. It came off neutralized and then it exploded. This is common when you're in these type of market conditions. You will have these opportunities like this where the market will finally choose a direction and then move very powerfully in that said direction. All right, so that's what you got going on here. All right, next up we got the Russell. So the Russell has been the weakest of the stock indices, and now it has a bullish trend momentum reading. So the bear market rally now is happening. Okay, it's actually happening now. And not only that, but you got a bullish intermediate situation going on here. And you just transfer from a bearish long term to a bullish long term. So you just crossed over to the bullish territory now in the Russell 2000. Once the market gets back above the old 2000 highs, it's off to the races and the market will really run. It took advantage of the rampage here, and then you got secondary rampage coming up. That should be able to lift the prices well beyond 2000. And then it'll be on the same footing as the NASDAQ and the S&P. So an argument can be made that the market was just waiting for the Russell to wake up. And the Russell, being the weakest of the stock indices, has the most to make up for. And if you look at this positive buy check prior to the breakout, there you go. It's explained for you right there. So the Russell now is all systems go, like the S&P and the NASDAQ. What about the US dollar index? Well, as you can see here on the algo chart, we are in free fall. The market finally broke out of that consolidation that lasted, seems like forever. Well, the support was at 101, the resistance was at 105, and it just stayed in that 400-point trading range. Now you're hitting new 52-week lows, and the dollar has dropped below par. All right, you drop below parity. For those that don't know what that is, when we're talking about forex, parity is 100. When you drop below 100, you've dropped below parity. All right, you can use a similar jargon when you're talking about bonds also. So here you go, free fall. Where is it going to go? Right now, it's looking like it's going to go down past 90. All right, and just keep falling. It's in a free fall state. You're bearish, the long-term, intermediate term, and bearish trend momentum reading. So that's, and this is a good case study for you. You had a bearish trend momentum reading for the longest time in this market, right? And bearish trend momentum readings are sell rally mode. So every time the market rallies, the sellers came in and sold. Rallied some more, sellers came in and sold. Rallied some more, sellers came in. It's just wash, rinse, repeat. Just constant selling of rallies until the market drops. And then they take profit and get ready to do it all over again. And that's what you have happen here in the US dollar. So this should really help strengthen like the euro and the Aussie and the pound sterling. Next up is our Ethereum futures. So the Ethereum futures are neutralized for tonight into tomorrow's trading. It did pop up, which is great, and you did have a bullish trend momentum reading before this. So that's good for Ethereum. And the long-term trend is bullish, and the intermediate term trend is bullish. And it just finally popped really good above the Kumo cloud. So we'll see if it can stay above the Kumo cloud, or is it going to fall back down again? And this, look at this long consolidation. The price action has not changed since April of this year. Since April, folks, price is the same spot it was at since April. No movement whatsoever. But it has the potential to go. It's just a consolidated bull market, if you will. So maybe now it's ready to wake up and run. We shall see. All right, I see a few hands up. You want me to take a look at some securities for you, so I will do them in order. All right, let's see. What do I have available? Let's see. So XRP and XLM. All right, let's see here. Bear with me for a moment. I need to see what I can do for you here. Let me find it. Find what I need to find real quick. All right. I know what I have around here somewhere. I just have to find where I put it. So bear with me. I know I put it somewhere. All right. Okay. There's that one. Okay. So where's the other one? Okay. It's around here somewhere. Just bear with me. For the life of me, I don't know where I put it. Oh, here it is. Okay. Right in my face. Okay, never mind. All right, so you want to see XRP Ripple. All right. And you want to see XLM. I do not have XLM on my list. No XLM at this time. All right, let's see what else. Do anyone else? While I have this up. Okay, nope. All right, so we'll do this one real quick. All right, this is the XRP Ripple. All right, so all right, this one here. Wow. All right, so you just crossed over from bearish to bullish now with this incredible rally. This is wow. Something just definitely going on. You just hit a new 52-week high in your Ripple. I don't know how that's even possible, but it looks like that's exactly what you did. So this one has just turned bullish now on your Ripple. I'm impressed. Ripple has been flatlined for so long now. Now it's finally waking up. All right, so next up we got Wolf. Terra Wolf on the NASDAQ. Let's see what we got here. And then the next one is UTME, also on the NASDAQ. All right. Then after that, you got GREE, also on the NASDAQ. All right. Then you got IOVA, also on the NASDAQ. All right. Then we got let's see here. Okay. Okay. So ATXI. All right. ATXI, also on the NASDAQ. Then we got MREO. All right. Let's see this one. MREO. And that is a biopharma company. Okay. All right. And then we got. Okay, that's it. All right. Let's sort these out. All right. No particular order. We're just going to run through them. All right, let's do it. All right. So wow, look at this. All right. So this is Terra Wolf. TerraWolf has broken out. You've crossed over from bear market to bull market officially, and you have a bullish trend momentum rating, and you just hit a fresh 52-week high. So this one's wide open. This one is definitely wide open to run. What you want to do if you've missed the opportunity to get involved in this would be to wait on the pullback to come. Okay. Um, you're definitely going to want to do that because as of right now, the market is still running. I mean, you could gamble and try to get in there and see what's what. But just understand when you get in the market before, um, getting an official buy signal, you run the risk of the market. That could be the day you get in, could be the day the market, tops out temporarily. And then you would have to set through that drawdown until the market, revs back up again. But, if you're already long this market, this is great. You want to definitely start popping your way out of it. Pop is a method that we have put together here at PulseWave Trading. If you go to pulsewavetrading.com, you can learn all about the pop method. It shows you how to manage your open positions and when to take profit. Not only that, but we also have the trend following mechanism of the pop method on our daily reports that we put out at pulsewavetrading.com on your dashboard. So each and every day, there will be recommended stops for you on there. All you have to do is move your stop to the recommended stop listed on the report. And it's designed to keep you in the market for the entire trend. So you can take the entire move. So if it only lasts a few weeks, you catch all of it. If it lasts months, you catch all of it. If it lasts years, you can catch all of it. And that's how we designed the system. So you don't get shaken out and when volatility increases. All right, so that is TerraWolf. Next up is MREO. All right, and this is a biopharma company, and it's been neutralized now for 4 days. What has happened is the market has finally gotten itself into the bull market position, but it has not really been trending. It's kind of consolidating up here. That's why you've had the back-to-back neutralizations going on here. If you're already long the market, that's fine. But if not, you're waiting for the market to come off neutralized so you can, find a position to get in because it's bullish and you got a bullish trend momentum reading. So the market is in the buy the pullback, buy the dip mode when you have a bullish trend momentum reading. All right, so this one's not bad either. And when you put it into perspective, you're in a bull market, so there's nothing wrong with getting long a bull market. So another good potential security here. All right, next up is ATXI. Okay, so ATXI. All right, and this one is Avenue Therapeutics. Okay. All right, so what do we got here? Let's see. All right, this one is absolutely flatlined. It has not done anything forever. Going all the way back to December of 2022, you have not moved here. You're basically trading around a buck to $1.21. Let's see if there's enough data to pull up a weekly chart here. Maybe we'll get a better longer term perspective. Let's see. Yeah, I saw you on that one. You said that the judge said the SEC is wrong and XRP isn't a security. Yeah, the price action tells you everything, though, regardless of what's going on with the battle in the courts and all that. I have heard before that there's something about XRP Ripple. A lot of people don't like it, but it has some kind of government backing or some kind of big Fortune 500 company type backing. There's something about it, put it that way. I don't think Ripple is going anywhere for a while. So XRP, Ripple, Bitcoin, Litecoin, Ethereum. Those are like the major players right now that a lot of apps and a lot of money is being thrown at. So I'm aware of that. All right. So what else we got here? All right. So this is still not helping on the weekly. All you're seeing is a longer term bear market, but it did come and gap down, then it filled your gap, and then yeah, it's just been flatlining. Like there's no interest, there's no real interest to do anything in it. Like whoever's holding it is just holding it, and there's no one really buying it. It can't catch a bid to save its life. Not to say that it won't eventually do something, but just right now, this one's this one's kind of dead. Unless you have some fundamental reason to hold it or whatever. This is not a tradable vehicle at this time. It's more of a long-term investment if you believe in the company, kind of thing. But just from a trading perspective, it's there's nothing to do here. At least not yet. Not yet. All right, next up we got IOVA. All right, so IOVA. All right, so this one is in a bear market still, and it had a nice little bear market rally. Then it went sideways for a while, holding on to those gains. Then it started slipping, giving back some of the gains, and then it got bid right back up again. Then it fell. Yeah, this thing it's trying to get a bear market rally, a sustained one going. You got a bearish trend momentum reading again on it. You had a bullish one that only lasted a day here and a day here. More, you're just consolidated on this one. There's not a lot you can do. According to the algo chart, you're in a sell the rally mode, and that's what's happening here. Sell, 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 and now sell, and you're locked in. Bear market long term, bear market intermediate, and you got a bearish trend momentum reading the boot. So in all categories, this market on IOVA is bearish. All right, next up is GREE. Let's see what GREE got going on. All right, so GREE is Greenwich Generation Holdings. All right, and on this one, it looks like you got a long-term bear market with an intermediate-term bear market, and you have a bullish trend momentum reading, which means that the market is trying to get a bear market rally going. So it is trying to do something. So this one, believe it or not, is a buy as long as you got a bullish trend momentum reading. You are in a bear market rally mode, and who knows where it's going to stop. So this one is a buy for now, as long as it stays above the Kumo cloud, and as long as you keep the bullish trend momentum reading. GREE would be a short-term buy off of the bear market rally. All right, so the next one you got here is UTME. Is that how you say it? UTME. Utah. So it's UTime. It's the name of the company. All right, so this one, it has a bullish trend momentum reading, and you're in a. Well, hold on. Let me take that back. Hold on. All right, you're consolidating heavily up here, but you're in a bull market, and you're above the Kumo cloud. But your trend momentum readings keep flipping and flopping. When you get all these flipping flops and colors, that's a heavily consolidated market, borderline neutralized. And that's why you had a neutral bar here, a neutral bar here. Now the current bar is neutralized. So going into tomorrow, you are neutralized. So you do nothing going into tomorrow. Once again, if you're long any of these securities we've been talking about, you want to definitely use your protective stops, lock in whatever profit that you can. Yeah, so this is a neutralize. You would do nothing tomorrow. You got rampage coming up. So the market should be able to pop as long as it's above the Kumo cloud. But this bearish trend momentum reading that just turned neutralized is concerning. That's pretty concerning. You don't normally want to see that. So this one is just consolidated. There's really nothing to do. You're in a bull market, so technically speaking, you're looking for a buying opportunity. It's just you can't really find a good one yet. So right now, this is like buy and hold with a protective stop, if that makes any sense to you. But really nothing to see here. All right. So that's it, folks. That's what we got, man. So hopefully you got enough to go on here and get your marching orders. If you are not a subscriber to the PulseWave reports, I highly recommend that you go over to pulsewavetrading.com, take the 14-day free trial challenge where you get to try for 14 days free of charge, see how much money you can make trading alongside the methodology, learn the system, learn uh, the, the, the methodology to protect your open positions and manage your cash flow and your risks. And I think you're going to be very surprised at just how powerful the methodology is. It's effective in every market, whether it be stocks or forex or cryptos or futures, doesn't matter. Effective in all markets, robust, and has over on here on YouTube over a decade worth of track record. All of my videos are on our YouTube channel. I've never taken down that one video. Win, lose, or draw. All our market calls and stuff are on here. Even our famous silver top that we called back in 2011, we called it intraday as the market was moving. That video, you should still be able to find that. The video where I called the top in Bitcoin when it hit that 60,000 mark, and I warned everyone, I begged everyone in multiple videos to take profit or at least tighten up your stops. And unfortunately, a lot of people didn't listen, and so they lost out. So all of our legendary videos are on here. Even my May 6, 2010, the flash crash, those videos are still up. I was the first one to speak on it as it was happening, and I exposed it and told everyone what the truth about it was, what really happened, and why and how it happened, way before the media even covered it. And as soon as they took to the air, I had already made my video, and they did and said exactly as I told you they were going to say. They said the same thing I already knew what the narrative was going to be, and I told you what it was going to be, and that's exactly what they ran with to this day. So all of the stuff is there, and even our documentaries are there, the two that I did back in 2016 when I predicted what is happening in the crypto space right now, how the governments of the world are wanting to take it over and totally control it and come out with their own blockchain technology and their own crypto currencies backed by, nothing. So I talked about all of that. And that was back in 2016 when no one was talking about that. And I exposed even back then how sovereign wealth funds and hedge funds and government agencies and BlackRock and all those guys were coming into the crypto space, and they were going to wreak havoc so that they can cause it to be defunct, so to speak, while they roll out their own technology. And those two documentaries are still on YouTube as well. If you go to our channel, just you'll see it under documentaries. Those are still there. All right, folks, you know what it is. The system works if you work the system. Bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back, and smash that like button. Which membership gives you equities? I forget the name of it, but we give the full breakdown on the website. It will show you. If you click on the different memberships, it'll show you which one. I forget what we call it now, but it does break it down and tell you. It shows you what you get with the memberships. So it's there. I just forget the name of it, but it's there. I think we have like 3 or 4 offerings, maybe even 5. I don't know. We consolidated over the years, but it's there. If you just scroll down, it'll show you everything you get and which plan gives you what. So it's all there for you. All right, folks. I hope everyone has a wonderful weekend, and I'll see everybody back on Sunday. Peace.